What's going on? YouTube, Facebook, everybody. What's going on, Asheville, North Carolina? I'm sitting here in Asheville, North Carolina. You guys might know this guy.
Hello.
Justin Fraser and Hervé Francois. Right?
So, guys,
we're going to be talking a little shop with you guys. We're doing a little mastermind down here in Asheville, and we've got the Jacob Sandoval. It's his full name. His first name is the middle name Jacob, last name Sandoval. What's up, Jacob? It's good to be is here.
How's it going, guys? How's it going?
Tell me something good, man.
No, I mean, it's a beautiful sunny day in San Francisco, California, so you can't complain.
Yeah,
very nice.
Good stuff. Listen, if you guys are watching live on Facebook, give us a hi. If you guys are watching live on YouTube, give us a hi right now. Love to hear from you folks, to hear what you got to say to everybody. We're going to be talking shop about like the market, let's say, has changed, the real estate market. But DeRosa is still doing deals.
Still doing deals. Got to do deals.
Still making it rain, right?
Yeah.
Not talking a little bit of trash there, but at the end of the day, we really are. And we want to talk to you guys about how we're doing it and how you can do it too. And we're still finding deals and we're still raising money in today's marketplace. GV is saying hello from Philly. Hello, GV. How are you today? How are you? Give me a quick shout out. How is the weather in Philly? That's our home. That's mine and Hervé's home region. Yep. But we're down here in Asheville, North Carolina, right? Asheville is fan-freaking-tastic. Before we get into it,
Asheville is great, man.
Give us a quick, give me like your big from Asheville so far.
Well,
what you got?
Parts of it is kind of blurry. It was one kind of a night. Hey, but no, listen, it was a great time. Asheville.
What happens in Asheville stays in Asheville?
Yes, exactly.
Right.
So I won't be saying too much more. But in Central North Carolina, absolutely beautiful place, outdoorsy restaurants and bars, rooftop decks, beautiful weather, and so on and so forth. Very welcoming. Town, really, really nice people. And we just decided, three of us, to take a couple of days and focus on working on the business of DeRosa Group, where we are, where we're going, our teammates, our revenue lines of businesses, and so on and so forth. So it's really exciting. It's gorgeous weather out there. I actually wish we could be enjoying more of Asheville today. I think we'll do that this evening.
We might.
So we're inside locked up. With the Brain Trust, going ahead and planning our futures, really, both personally and more so professionally here.
Yeah, there's nothing in Asheville, North Carolina, says Lee Johnson on LinkedIn. There's a lot of fun restaurants, a lot of cool, crazy, eclectic stuff going on here. Justin, man, let's talk about give us a history lesson, Justin. We're going to be talking about finding deals and raising money, but today, the 2024, it is not 2023 or 2022 or 2021, right? DeRosa is making it happen and still finding deals and raising money, but it's not the same market. What's different, man? I mean, I know I'm maybe preaching the choir a little bit, but give us a quick backstory.
Look, we all know everything is different. Everything is harder than it was a couple years ago. Volume of deals, of transactions is way down. We know that a lot less properties are being listed for sale. We know that when they are being listed for sale, it's kind of not even a full listing. It's usually a floating, and an owner will go to a broker and say, "Hey, what do you think you could maybe get me?" And then the brokers will kind of approach us and say, "We have an owner who's maybe thinking about selling." And so it's not even full commitments because sellers are not necessarily going full out for marketing right now because they know that prices can be a little funky.
Yeah,
and prices are funky because interest rates are very high right now, so it's hard to get a loan. Insurance costs have skyrocketed over the last couple of years. Taxes, of course, are up. All our labor costs are up. And so we're struggling kind of across the board with increased expenses. And we're not getting that great bump that we had during COVID, which was rents going up 10, 15% per year, which was great for us, but that has stopped. And we're swinging the pendulum the other way, where rental rates are mostly stagnant, and in some markets rental rates are going down. Thankfully, we have not seen that. We're not seeing rates go down, but our fixed cost, our income is kind of staying steady, and so all that combines to make deals a bit harder to find and pencil out.
We got Eric Platter, Captain Hashtag, my man. Every time I go live on our awesome DeRosa Insiders Facebook page, Eric is there taking the nuggets that I'm putting out there and hashtagging it in that. So Eric, I'm going to put hashtag there for you, right? As Justin said, man, interest rate hikes, rents not doing what it was doing, and there's likely some distress underneath the sheets coming down the pipeline, right?
Absolutely.
what I want to put out, like, let's like do quickie lesson, right?
Sure.
What I think works on finding deals is being willing. I mean, back, you didn't have to be creative, man. You just had to catch a deal.
Yep.
The last 10 years, creativity didn't really mean anything, right? It didn't mean, you know what, right?
Yeah, absolutely.
But what is becoming back in play, what's going to get things done today, and this is what I remember from doing business in 2008, 9, and 10. If you weren't creative, you were on the bench.
Yep.
100%. Like if you weren't able to figure out how to do a short sale or seller financing or negotiating some sort of creative way to make it happen, brokers rolling their commissions back into the deal to make it work or whatever it took to get creative, you were not closing a deal. You were on the bench, man. And DeRosa has figured out ways to get creative.
Yep.
Right.
Yep. Absolutely.
Like, what are some ways that we can go? Like, you're our fisherman here. Right?
Yeah.
And that bringing stuff in. What does that mean on your side?
On an acquisition standpoint, basically what you start to do, you take a look at all aspects of acquisitions. Where are we looking for deals geographically? How are we structuring deals? What asset classes could we potentially be looking at? Other asset classes besides just multifamily. It's a way to go ahead and diversify our risk, to go ahead and juice up some returns to investors and things like that. So as you guys know, we're currently involved in a deal that puts us in a new geographic location, as well as a new type of, not necessarily brand new, not necessarily a new asset class, but the asset being formed in a way that we have not acquired before when you start talking about development and so on and so forth. So these are different things in regards to structuring. A lot more conversations with our loan brokers, the type of different loans that we could put on deals, has us look at the occupancy of deals, has us look at how are we going to go ahead and renovate the units. Constant conversations with Justin and our property manager, Tara, in regards to, okay, maybe we're not going to go ahead and turn 30% of the units in year one. Instead, it's going to be 15% of the units, rather than taking up the rents by an additional $150.
This aggressive growth plan thing, man.
Exactly. Temper, right?
Yeah.
So
aggressive growth plans used to work the last couple of years, man. But aggressive growth plans, Matt talking, take two. Aggressive growth plans are, I think, the kiss of death in some ways.
Absolutely.
But then that changes that. But let's flip it around, man. I'm gonna call him my man Jacob Sandoval right here, who handles all of our investor communications and everything like that, right? Jacob, the world of like raising equity just a few years ago used to be, to use the fisherman's term, right? You just pretty much throw a net in the water. And there were buddies that I had, and even us or whatever, you'd go do one webinar and raise $10 million. Boom, there you go. Put your deal on Facebook and stand back like this and let the money roll in, right? Not the case anymore, Jacob. How has the equity world changed? Not just at DeRosa, not for our conversations, but just in the world. What have you seen in all the equity conversations you've had with investors? Like, how's equity changed, and how have we had to change the game with regards to equity?
Yeah, absolutely, Matt. So I think investors, LPs, they're a little bit skeptical right now. And I feel rightfully so. We're in kind of a frothy economic environment. Are we going to have a hard landing? Are we going to have a soft landing? Are interest rates going to continue to go up? When are they going to come down? We're in an election year. A lot of these people are in deals that haven't panned out in the past couple of years with a lot of different syndications. And so I think rightfully so, people are skeptical of these investments right now. And, I think they're getting a little bit more inquisitive about these aggressive growth plans. Like the typical value add multifamily deal, it's tougher to execute these days. We kind of already touched on that. So LPs they're a little bit more skeptical. They're asking a lot of really good questions. And I think they're doing the right thing. They're turning over more stones when they're talking to me and talking to other syndicators and trying to figure out, is this deal what they say, the deal is? Because, for the past couple of years, maybe those things haven't panned out. So I think they're rightfully a little skeptical.
Yeah, absolutely. So I mean, just like equities had to get a lot more patient in current deals that it's in. right? Because the market's changed and aggressive plans that syndicators went into deals with have not quite panned out yet. And plans such as at DeRosa, we've had to change and pivot our plans that we had when we went into deals and that. And so that's had to create a lot more patience. A lot of deals that were bought in the last 3 to 5 years or whatever have had to pivot and change. And so investors are not like, oh, sure, let's write another check for this deal or whatever, for the next project and that. So equities had to get patient and pivot, right? And so it's what's interesting. Guys, I want to do a quick shameless plug. Okay. If you guys are watching this and you want to go and find more deals for you to do as an active syndicator, right? We have a phenomenal untouched program that is like no other program you've ever seen. It's not a program on how to raise money, right? Not a program on how to find deals. Not a program on how to manage deals you have. Not a program on how to start a management company. Right. It's not a program on how to run marketing. It's not a program on how to build a business around multifamily. It's all of those things in one thing, right? With one-on-one coaching from these three knuckleheads right here, including me, right? Along with other team members that DeRosa has. It's all of it. It is the full, dare I say, the full syndication rainbow, all the colors of the rainbow, all in one thing. And that's called the DeRosa Multifamily Accelerator Program. We are running small masterminds. If you guys want to participate in a small free group mastermind, right? Make the comment, I'm in. Okay. Yep. Comment, I'm in right now, and our team will message you to get you more information so you can participate in a free small mastermind. If you guys,
how much is that small group mastermind? How much does it cost?
It's free. It's $0.
Free.
Zero.
Free,
right
free.
Now, not everything's free. You want to mastermind with us? You want to play with us? What we will do with you guys is we will do a mastermind for 1 hour with you in a small group. And we will also explain to you how DeRosa's, yes, it does cost money because guess what? You gotta pay a little bit to grow your business.
Right.
We will explain to you in way more detail what our paid accelerator program will be. But hey, 1 hour to hang out with me and this knucklehead over here.
Delivering value
right?
From the get-go. So even if you just come in, do the free, get some value, awesome, right? You can move on after that. But we also want to tell you how you can accelerate your business and gain even more success.
Sweet.
You've already got one.
Lee Johnson, I'll see you there.
People on Instagram is in right now.
Cool.
Just Drew.
IG, you're in this game. You're in this game too. Okay. All right. I want you in this game. We'll get back to you guys on comments and show you guys how to sign up for the free mastermind.
I want to point out something. That David Priest went ahead and just put up here in the chat box. So basically, LPs are doing more research and looking at track records more closely. This is a good thing. Experienced operators can benefit from this scrutiny. I want to really thank my eyesight for being able to read that from all the way back.
It's only because Nabiku made it bigger.
He did make it bigger.
He did.
It's very small.
If it were small with the thing, you wouldn't be able to get that. Neither would I.
Yeah. So all that being said, hey, listen, David, you're very, very bright. You're very in tune in putting that out there, and you're 100% right. And I think Jacob would agree with you as well. LPs are doing more research, as they should be doing more research. And listen, we've all learned, right? You shouldn't only do more thorough research during tough times like these. You should also probably should do even more thorough research during the good times, because like Jacob was saying earlier, a lot of folks are in deals today that they got in a couple of years ago that maybe if they had done a little bit more thorough research a couple of years ago,
it
wouldn't be in the situations that they're in right now, and so on and so forth.
So I think that's a good transition for how we've been doing due diligence on other people, right?
Yes.
Because it's not just people doing due diligence on us,
right?
But since the market's getting tight, we're looking at potential partners.
That's it.
Other people we can team up with.
That's right.
And we've been vetting people for years.
That's right.
That we're just now starting to have conversations.
That's right.
JV partnerships, right?
Yep.
So that's a tip, right? Y'all are going to find deals. Maybe forge a JV partnership with someone who's not on first base, who's a couple of miles down the road, right? So DeRosa's formed a JV partnership with a developer builder, right? And we've got a phenomenal deal. This is the creativity part. We get a phenomenal deal where not all the money going into the deal is equity. The local town where the property is also investing in the deal through a tax credit, right? And that's a great opportunity. And we got more in pipeline with that developer, right?
Exactly.
Right. So find creativity like something you can't duplicate over and over and over again, right? Be that seller financing, be that, maybe short sale that hasn't gotten back into play yet, but it will, right? But find some creative way. Virgil's coming to the free mastermind. Like, you notice that, right? Nice. See you there, Virgil. Here we go. We're coming for you.
Yeah, we got 3, 4, 5 people in there.
Cool. Awesome. Now, the creativity, whatever that looks like. And then JV partnerships. We've got a deal that we'll tell you guys a little bit about it in the inspiration that you may want to join us on this venture, or that you may want to find your own. I'm going to turn it up while we handle a few folks jumping in saying they're in on this deal, right? I'd like for Jacob, could you real quick give the highlights for DeRosa Capital 18? Because that is something I just want to make real quick before, if Jacob doesn't forget to say this. This is a deal for accredited investors only. Right. So this is a solicitation, and we should mark that, but this is a 506C registered deal for accredited investors only. We love our non-accredited investors that have already been through a vetting process with us, and we will have more coming for you in the future. This deal is 506C, which means it's for accredited investors only, which enables us to talk about it in public right here, which is a solicitation which we're allowed to do. Jacob, take it away.
Yeah, absolutely. So this deal is a 36-unit new construction project in Red Wing, Minnesota. Red Wing, Minnesota is less than an hour outside of the greater Minneapolis, St. Paul. It's more of a commuter town, beautiful town that's on the river, also home of the Red Wing boot, if you're familiar with that brand. The reason why we like this deal, and typically, as an investor myself, I don't like new construction because it could be 4 to 5 years before you even see a dollar back. There's entitlements, there's permits, and there's a lot of complications, a lot more risk. This is not that. This is all the benefits of new construction without the new construction timeline. Matt, Justin, and Hervé, they were there a few weeks ago. They were standing on the second floor, right? And so this building is, I would say, about 35% done. The building is going to be fully done, fully occupied by the end of the year.
He's got a roof on it.
Got roof trusses.
I talked to the developer yesterday. Check this out. He's moving so fast. There's a roof on the building. The box is pretty much tightened up now, right? It's crazy. Like you just said, we were out there 2 weeks ago, right? YouTube videos and stuff like that on our YouTube channel, like of me and these two guys running around in hard hats. I look pretty good in a hard hat, by the way.
Yeah, barely fit my head.
Yeah,
barely fit my head. How big is it?
And Justin, they had to get Justin a different size hard hat.
Yeah.
Yeah, for this head. Right. Yeah.
That's amazing.
I mean, the building, Jacob.
Yeah.
Jacob,
so the building is almost done. We're going to be done by the end of the year. Not to mention, this building is 50% pre-leased even before construction is almost over. So we are supremely confident by the end of the year, this building will be 100% occupied and cash flowing. So there's not many new construction deals that you're going to find that are going to be cash flowing, within 6 months. And the project is going to be completed within 6 months. The other things to highlight about this deal is, one, we already mentioned this, Matt, but we're getting local support from the local municipality through tax increment financing, also referred to as a TIF. And all that effectively means is our property taxes are going to be a fraction of what they would be for the duration of the hold. So our property taxes are much, much lower because we have the support from the local government, which, as you can imagine, as an investor, is going to boost cash flow. The building is going to be a brand new build. So our expense ratios are going to be much, much lower when compared to a 1970s, 1980s build. We're forecasting expenses to be in the 30% range, whereas multifamily typically is in the 45 to 50% range. So cash flow is going to be really strong. And then kind of like the last thing to celebrate here is in September 2025, so just a little over a year after fully operationalizing it and stabilizing the building, we're projecting to give 30% of capital back to the investors. So getting a good chunk of your capital back to be able to do more deals and to be able to accelerate the velocity of money. So there's a lot to be excited about with this deal, but it's a solid one.
Yeah. Jacob, if I would add, thanks very much, Matt. Jacob, if I would add, and thank you for those salient points on this deal, what I would add on top of it, remember the town of Red Wing, they had done a study several years ago when they had to figure out there's a housing shortage in their market, right? Red Wing, nice town, like Jacob said, sitting on the banks of the Mississippi River. A population of 17,000, there was a major housing shortage in this town. They did a study a few years ago. The conclusion to take away from that study is that they need an additional, at a minimum, 750 units that need to be brought into Red Wing, 250 of those 750 units need to go into downtown. This 36 unit development is the first of 250. You have residents that are in Red Wing, as we ran into them a few weeks ago when we were there, saying, hey, listen, we haven't seen a crane in the sky of this city in the past 18 years. This is absolutely outstanding. So
and Justin asked to drive the crane, they wouldn't let him do it.
They wouldn't let him do it.
Let Justin
I really wanted to. Come on.
Guys, quick ask here. If you're an accredited investor and you're watching this feed right now, right, you got two options. Jacob, what easy call to action, Jacob, if you want to throw them to the website and that. But yeah, Jacob, why don't you, if you're an accredited investor, you'd like to hear more about this deal, we've got literally a couple of shares left in this project. We'd love to have you on board. So Jacob, and this is for deals can be leased up and cash flowing this year and refied early next year. Jacob, what should folks do if they want to hear more about this? And my man, up in the comment section, but just say what they got to do.
Yeah, so very, very simple. Just go to DeRosaGroup.com/DC18. DeRosaGroup.com/DC18. That's going to take you to all the information you need to know on the deal. Within that link as well, you'll be able to book a call directly with me. We can have a chat about it. You can ask all the questions you want on the deal. Happy to share information. But DeRosaGroup.com/DC18.
And one more thing, guys, if you guys want to hear more about it and you want to just do the comment section, right? Just write DC18, the letters DC18 right now in the comment section, whatever feed you're watching on LinkedIn, Facebook, or YouTube, then we'll get right back to you. So you want to just be that efficient, just write the words DC18 if you're an accredited investor. Right, we'll get right back to you with more thoughts on this deal, and we'd love to hear. We'd love to have just a few more people on board. We're almost fully funded, raised well into the millions on this deal, and that just a few shares left. Now, like I said, if you guys want to learn how to find creative deals like this, maybe there's a developer in Europe in your local region building in a town that needs more housing, right? We can help you figure that out. We can help you with what our accelerator program does is teaches people how to find the money, how to find the deals, how to build the team, how to do the marketing, how to manage the deals once you got them. What do you got?
Well, building the team is the most important, is truly one of the most important things, right? And that is, I think, how we got led to meeting this developer in which we're doing a JV on this particular deal. Folks, if you're not out there, if you're not networking, you're not going to these RIA meetings, you're not going to these conferences, like the Great Best Ever conference that we attended a few weeks ago, where now you're meeting people. We talk about partnering up with folks in which you have a strength, but you at the same time might be a little bit of weakness. And at the end of the day, you find folks that are looking to do deals in the same markets perhaps that you are, and you're seeing where you can collaborate. And this is exactly how we went ahead and found the partner that we are currently working with on DC18. Yeah. So be out there.
I'm going to throw one more shameless plug out there, guys, but this is free. We're just slinging out free stuff today.
Another
right?
free.
Yeah. We got free tools, right?
Yeah, a lot of free tools.
Yeah. If you guys want to figure out which of your multifamily superpower, multifamily strengths you are, right? That we believe that everyone brings a certain strength to real estate investing. It is our stance and our belief that everyone's great at something in life, and that means that you're great at something in an investing career that you may like to have, right? Mm-hmm. And so we have a free assessment, take you maybe 5 minutes to take, right?
That's it.
And you can get access to that by going to DeRosaGroup.com /education free tools, right? Or DeRosaGroup.com /superpowers. That'll take you to the superpower assessment. Hervé, real quick, you developed a market hunting tool that is also free.
That's right.
Yeah.
Yep.
Can you tell us real quick what that is and how it can be used?
Yeah, the market analysis tool, you can find there. You can find that tool directly on DeRosaGroup.com /education or /market tool. Thank you, Nabiku. So bottom line, this market analysis tool, it shows you the website resources that you can go to find out those metrics that we use to help to determine an attractive market to invest in. When we start talking about metrics such as population growth, job growth, income growth, median income and things like that, where to find it. You can go ahead and assess a market relative to the US averages and see, is this truly an attractive market or an unattractive market to invest? Like Matt said, it's all free stuff. You don't need to pay to go ahead and get subscription. to websites out there to find this information. All this information is free. However, if you like to go to one website where all this information is aggregated and it is predominantly put together for real estate investors, then you can certainly look into the Bright Investor tool, which has its own pricing plan and whatnot, but it's a very, very effective, very, very efficient tool where they even go into deeper factors such as building permits in particular towns and zip codes, and now being able to assess one town's attractiveness versus another for real estate investing. But a lot of free resources out there. Highly recommend that you reach out and take a look at that free market analysis tool.
All right.
I want to bring it back real quick.
Bring it in.
Back to DC-18 real quick.
Yep.
You know, we've got a great opportunity, great partnership here, but you may have questions. You may not be ready to invest your hard-earned money today based on this Q&A, but we have a full webinar presentation. We've got a whole bunch of resources. If you go to DeRosaGroup.com/DC18, you can check all that out. And also, if you want to chat with us about it, Jacob is putting on a webinar. Jacob, what is May 9th?
It's a Q&A. Right? If they have Q,
Q&A.
we have A.
That's right. Tell us about that
You
Q&A
got the Q,
webinar,
we got the A.
Jacob, for May 9th.
Yeah, so next week on Thursday, May 9th, me and Matt, we're going to have a full webinar. So we'll go over all the information on DC-18. Maybe you didn't make the first webinar. Maybe you haven't seen the replay. Maybe you're just hearing about the deal now. We're going to give you a full rundown and give you the opportunity to ask us any questions about the deal. Again, the opportunities are filling up fast. We only have a handful of slots left in the investment. So this is kind of the last chance opportunity. If you're interested in learning about the deal, we encourage you to attend the webinar and hang out with me and Matt.
We may not even make it to the webinar, by the way, but I think we'll still do it.
We may be fully funded, but
who knows?
Yeah, but you know what? There's more in pipeline behind. There's more where that came from because we've got a lot more in pipeline. Okay, but attend the webinar either way. It's going to be great. There's your link right there to sign up for the DC-18 Q&A webinar. One last thing to bring it home, guys. A few calls to action, right? You want to attend a free mastermind on multifamily and you're ready to pay out of pocket to take your multifamily business to the next level. So it's a free introduction to a multifamily mastermind and also a discussion of your goals and how our accelerator program can get you there. Type I'm in right now into the comment section, whether you're on LinkedIn, over here on Instagram, right? I see you, Instagram. Hop in. There's already a bunch of IMs coming on Instagram, a bunch of IMs coming on from YouTube, LinkedIn, and Facebook over here, right? So type I'm in, and we will get you the information to join a free, capital F free mastermind on how we can help you take your business goals to the next level for multifamily. Go and type in DC-18. If you're an accredited investor, want to hear more, or go to DeRosaGroup.com/DC-18. You guys want to hear more about making phenomenal cash flow on a new construction project without new construction timeline, right? Justin, take it home, man. Final thoughts.
That's it. We've said it all, right? We've got everything. If you want to learn how to build your own business, we got that. If you want to invest with us passively and great cash flow and wealth for your family, we got that as well. So we are here. DeRosa Group is here to answer your questions, whether it be on building your own business or how you can invest passively with us and make yourself rich.
We're going to do it, man.
No doubt. Yeah, absolutely.
Yeah.
So,
hey, listen.
Get rich faster.
Appreciate you guys coming in on such short notice here today.
Yeah, cool. Right. Jacob, thank you. Appreciate you joining us, man. It's gonna be great. We're going to go enjoy some of Justin's homemade barbecue that he made for us. When in Rome, when in North Carolina, eat meat, pretty much, right? Guys, grateful for your guys' time today and joining us. Thank you.
Thanks, everybody.
All right.
Thanks, guys.
All right. Thank you.